Chakri, good morning. Thank you for joining us. Is the worst behind us? Is it time to start nibbling? Is it time to start shopping?
Good morning. Thank you for having me. I think so, because if you look at the earnings results coming out of Reliance, Infosys, across sectors, there has been kind of a bottoming out of EPS estimates. If you look at Reliance, very diverse companies, retail is picking up, chemicals bit has kind of bottomed out. And in the case of Infosys, of course, US is expected to be very strong. So I think, that trend will, and textiles will benefit. So therefore, I think there are different pockets which will begin to benefit from the bottoming out.
So what is your current strategy? Are you sitting on cash? Have you used up all the cash? Are you looking long dollar associated trades or dollar reversal trades now? Where are you exactly participating and how are you participating?
I think in two ways. One is if you look at the latest US results, recently JP Morgan, Goldman Sachs, all of them reported results, very strong numbers, and they have indicated they will increase their IT discretionary spending. And that is good news for the Indian IT services companies. Second, retail. In the US, the retail deals are picking up. And also they've indicated an increase in the CapEx spending. Again, good for Indian IT companies. Chemicals still a long way off. Telecom still troubled, but most importantly, financial services and consumer. Second is power. With the US again, more focus on thermal fossil fuels. Companies like NTPC in India, Power Grid, all of them have corrected quite a lot. Earnings visibility is there, and therefore that's another segment that we're looking at. And third is, of course, PSU banks, which don't have the problem of credit card related, consumer related issues as much as the private banks. So these are the three broad segments within which I think there are a number of opportunities to look at.
Okay. I'm looking at some stocks here, and yesterday railway stocks saw evidence of pre-budget buying. Naresh, has the pre-budget party started? It has started with railways. Could it move to other sectors now?
So railways looks interesting for the fact that they've corrected a lot also. So if you were to look at the Jupiter wagons or Titagarh wagons, the two larger ones on the private side, the stock has corrected. Jupiter wagons has corrected from 750 to 450. Yesterday saw a volume bump up, but we saw a similar volume bump up also happen in December. But the stock is making a base around this 430, 450 mark. Titagarh wagon, again, the stock has corrected from almost 1900 to 1000 odd levels, 1050. This is where a fundraise also happened. So Jupiter wagon is 20% lower than the fundraise prices. So going forward, I would expect the railway rally to be more focused on the private side than on the PSU side. So the basket of Titagarh wagon, HBL Power, and Jupiter wagons to be taken to be looked at. HBL Power could be interesting. Even that stock saw a bounce back yesterday. So that would be the most interesting name.
Well, the one set of earnings, other than, of course, an LTI, Mindtree, Reliance, Infosys, Axis, all of them, of course, are going to be in focus. But Havells, the Q3 numbers are below estimates, and the cables and wire business growth was muted at 7%. Chakri, looking at Havells' performance, what is it telling you about the entire sector? Because the sector has been so fancied, and most of these stocks and the leaders in the pack haven't quite corrected. And I'm talking specifically about, the cables and wires segment.
You're absolutely right. It's an indicative of what's happening in the underlying economy, because cables and wires are used for both domestic as well as in commercial uses, and that has kind of still remained kind of weak. But and again, they've grown revenue 7 to 10% depending on the company, and that is again more or less in line. Inflation is about 5-6%. If they're growing 7-8%, they're hardly going above inflation. But having all this said, the first segments that will benefit whenever there is an interest rate cut in India, as the cost of working capital comes down, will be all the various capex related, and that's where cables and wires will benefit, I think. So whether it's Havells or even companies like Finance Cables, they were all corrected quite a lot over the last 1 year. So I think worth beginning to look at those companies.
Okay, point taken. Kunal, wanted your take regarding some of these stocks which will be in focus on account of brokerage action. Citi has actually initiated a pair trade wherein they are suggesting to go underweight on Dr. Reddy's and overweight on Sun Pharma. Does the chart check suggest a similar pattern? And the other one is Indus Tower, another upgrade coming in. It was a UBS a couple of days ago, and today CLSA is calling it a high conviction outperform.
No, in fact, Dr. Reddy was one of the stronger charts from the pharma pack, except for the last 2-3 days of underperformance. When we look at this relatively, the last 3 months or so from November lows, October lows for Dr. Reddy, I think if I'm not wrong, it was around 1180 mark. The stock had done reasonably well, so I still believe that the stock from 1180, 1200 levels went up to almost 1400 mark, still at 1300 zone, which means it's not yet come even to the midpoint of this 300, 250 odd point price rally for Dr. Reddy. So the charts are still looking fairly attractive. But I agree to the second point that Sun Pharma is the one which is looking fairly attractive. That's a chart which has gone through a very gradual kind of a correction. We've seen the stock ebbing off almost 10%, 15% in the last 2-3 months. There was a point when the stock had gone through a major mean retracement or a mean reversion towards its average. So that stock looks attractive. Indus Tower, on the other hand, I think it's an excellent chart in the making. I've looked at the stock over the last 2-3 years from a point when the stock had given a very big breakout about 150, 170 mark. That was a point when the stock used to be extremely volatile. That volatility has dropped down for the stock, and we've seen the stock more trending in nature. I think if I'm not wrong, just in the last 3 days or so, the stock has rallied almost 8 to 10%, moving up from 320 as a support point for Indus Tower. So I still believe that that chart looks very attractive, and the fact that the move is backed on extremely strong volumes makes it a more sturdy trend.
Looking at some of the other stocks also which are going to be in focus this morning, we've talked about Havells. There's also AB Fashion, remember. They're looking at launching a QIP. They're looking at a fundraise. The floor price has been set at about 271 rupees thereabouts. Metro Brands, we were just chatting with the management as well. Our festive season, of course, has managed to support growth for them. TVS Motors, they've now entered Morocco in a collaboration with their distribution partner, Hindi Motors over there. So look out for what that stock as well does. And then, of course, LTI Mindtree as well is going to be in focus. Naresh, what's the call now for the IT pack? Because it seems a little bit mixed. The call on Infi looking at the ADR and analyzing the numbers is the stock is going to go down. Perhaps today, TCS, we've seen how it was a one-way street up after its numbers. And for LTI Mindtree, it seems like we're headed in for an uptick today.
So what we've seen is any bit of disappointment and guidance also being weak. The stocks have corrected. Out there, Infosys is interesting. Like I've been calling, there should a big gap down would be an interesting entry point. So the stock has had multiple resistance around that 1950 to 2000 mark, and the supports are placed at around 1750. So closer to 1800 is where you want to be buying into the stock and accumulate all the way to 1750 odd levels. Eventually, over the next 6 to 12 months, this could be the leader because that is the chart structure. The base is set at around 1750, 1800, 2000 is the upper resistance, which it should eventually break. So that looks the most interesting, and we'll continue to see such divergent moves across the IT pack because many stocks have had different moves over the last, say, post the last 6-8 months. So you have some stocks which have been sideways, some have gone into new all-time highs and made much better moves. So we'll see these divergent moves, but going forward, the large cap, I would be interested in Infosys on a sharp correction to 1750, 1800.
A minute to go, and I think today the interesting bit would be one side Infosys, other side Reliance. I think Reliance will have a much greater impact in terms of how things could move. But I want to stay with this graphic here. Let's stay here, please. Don't change. TCS flat growth, Infosys 1.7% growth, constant currency HCL Tech 3.8% growth. BFSI, HCL Tech on all parameters has actually gone up. If I do a very crude kind of a one-on-one analysis. But the stock reaction in HCL Tech was nothing short of a disaster because of forward guidance. TCS was an uptick and Infosys may not be great. So in the near term when stocks are reacting, it could be about what is in the price, what is not in the price, what the positioning of the stock is. And that's where I want to connect the point on Reliance, which is that stock's down 15%. The pain point for Reliance was retail was not growing. The pain point for Reliance was Jio platform was not growing. The pain point for Reliance was that you were getting no large growth in the O2C business also. Has that changed? Not decisively, but the numbers in a sense do pinpoint that the darkest dusk in terms of the retail contraction is over. and after a dark dusk, the dawn comes in. I don't know when the sunlight will start for the retail business, but yes, incrementally, if such a large business, despite the threat of quick commerce, which has the highest weightage in terms of sum of part, if that turns, I think that's exceptionally strong. Chakri, do you agree with me?
Absolutely, I think you summed it up beautifully well because Reliance's retail is actually one of the largest retail companies in India, very indicative of the Indian consumer and consumer spend. Quick commerce is a threat across all segments or all retail companies, but all of them are doing some work, including Amazons of the world have a quick commerce retail threat. So everybody is spending, and retail Reliance is also spending, and so whenever the consumer picks up, retail will be one of the first beneficiaries, and you're seeing signs of that. Now, as far as Jio, I think that will be a more steady state business which will grow. Of course, the IPO of the business will be a catalyst for the overall. And third is in terms of the oil business is going to be kind of volatile because it's very politics driven. It will take a few months, but net at least seems to be that oil is moving slightly higher with the latest US comments coming supporting fossil fuels. So given all this, I think some of parts, I think we've not even talked about new energy. New energy is still unvalued in Reliance. If you add all that up, there's significant upside for the stock.
If you like this video, then like, share and subscribe to ET Now.